appreciate that. Thank you, SCORE, for having me on and inviting me to share my thoughts and experiences and little wisdom that I may be able to offer the small business owner, the small business wannabe, uh, etc. Um, so, as Jerry said, my name is Joe Reyes. I am a CPA. I'm a practicing CPA. I have my own practice in Lansdale, Pennsylvania. I am also a capital acquisition consultant with the Widener University Small Business Development Center. As you can see on the screen, hopefully, you'll see my contact information. The Widener SBDC and SCORE are like sister organizations. We work together. We offer a lot of all free advice and counseling and all kinds of benefits, that would help a small business owner get off the ground, get started, buy a business, sell a business, solve problems. As a CPA, practicing CPA, the advice that I offer through Widener is the same information you would get if you were sitting at my office as a paying client. So the quality of the information is no different. The SBDC also has other types of professionals in different areas of business that can help a business owner get off the ground and to, like I said, solve complex problems sometimes and, just go into a new line of business or whatever. So there's a lot of good information available to you from free consulting and free mentorship with SCORE and the SBDC. I highly recommend you check out our websites and log in and ask for a free consultation. You will not be disappointed.
Joe, if I may interrupt you for just 1 second, could you just click on your full screen so that we see all the presentation?
Yep.
Let's start slideshow, I think is where it would be. So if you just go up to slideshow, hit start, that'll bring the first one up. There we go. Thank you.
Thank you, Jerry. So today's topic is going to be a conversation with a CPA. We've been kicking around how we're going to do this, because there's so much going on. Not only on if you're a business owner or want to be a business owner, not only what's going on your end, but what's going on nationally, and then of course as a CPA, and with so many tax returns to do and financial statements and counseling that we do otherwise. The CPA community is extremely busy, and of course, every day you wake up and somebody's texting you or emailing you or calling you, hey, did you hear the latest news? So our heads are swirling. We're going to start with a PowerPoint presentation. I've got some slides. I've got some stuff that I want to share with you guys. And then if you have questions or a question pops into your head, please do dump it into the chat box, and we'll start addressing them, because what we wanted to do was we wanted to not only present information, but we wanted to answer questions because we know these are very crazy times. So with that, navigating pandemic 2.0, by the way, this is a presentation for the small business owner, right? We're not talking about large established businesses, although, some of the information here would apply. But our focus really is to help the small guy, the small business owner, move forward and stuff. So as a small business consultant and a CPA, I know very well what small business owners are going through. I've been a small business owner myself, and I know what it was like to get started and unexpectedly get started and get a business off the ground, and the frustration and the anxiety and the challenges that one faces. So I've lived it. I am living it. So I think we make a good match in that regard. But again, so small businesses. All right, who are we talking about? Well, we're talking about somebody who has a side gig, right? You have a job and then you start something on the side. That's how I started my accounting practice, and eventually it became a full-time practice with 7 employees and hundreds of clients. This is also for startups. If you have a startup business, you have an especially challenging environment that you're facing right now. And also we're talking about established businesses. The one thing all businesses have in common is cash is key. You got to have cash flow. If you don't have cash flow, you're in serious trouble. And my recommendation is when you're going into business, make sure you have cash set up, because you're going to be in for a world of pain unless you're investing in some huge, hot product or service that doesn't require it. But again, but no cash, no business. Today's 800-pound gorilla in practically every business environment, every business forum, every CPA group that I'm in, whoever I'm talking to, the 800-pound gorilla right now is COVID. So what do we have to do for COVID? We have to keep lean and mean, right? So if you all remember way back when in 2020, a year ago when COVID hit, right? Everybody went crazy, and everybody started to get lean and mean, and the money was disappearing. Business people were going out of business. But here we are a year later, and guess what I'm seeing? I am seeing small business owners starting to get a little complacent, and they're forgetting that we are still in pandemic mode. China, I heard, has a bunch of cities that just went into lockdown. Europe is like COVID 3.0, I'm hearing, and Italy is in lockdown. Other European countries are in lockdown. Guess what? This is not over. And because this is not over, I strongly encourage you all, make sure that you stay in COVID-19 mindset. Don't relax just yet. Continue to spend very wisely, very carefully. Be as tight as you can, and then we'll talk about where to get money from if you can get money. But if I can give you any advice, it's don't relax. Don't start going into expansion mode and spending crazy, because anything can happen. You could wake up a week from now and there could be a huge spike, vaccine notwithstanding, and you could wind up in a world of hurt because you didn't prepare properly. So now is not the time to relax. With that, pandemic, what are we talking about? Everybody by now knows about the Paycheck Protection Program, right? Last year we started with the first round, the PPP first round, and now we have the new PPP second round in play. And we just thought, SCORE and Widener thought that now would be a good time to just really talk about that, plus, taxes, which is coming up. So we're still in a position where we can access funding through the PPP program. Strongly recommend you take a close look at that if you haven't already. There's money to be had, and a lot of it is free. The other one is the other program is the Economic Injury Disaster Loan Program, otherwise known as EIDL. Again, the first program started last year at the same time as the PPP, and they just opened it up again at the end of December. New legislation was passed by the Biden administration, talking about, giving people an opportunity to, go after some more funding on the EIDL. We're going to be talking about that shortly also. And then, there's other things that you can access, other cash flow considerations, grants, right? You may be, I heard that the PIDC now has a brand new grant that just opened up on March 15, just a few days ago. I know that, there are other organizations out there that are offering all kinds of free grants, free money for particular targeted individuals or businesses or whatever. So you should every day be looking around for where, what kind of grants might I qualify for, right? And so you just have to keep your wits about you. No one person knows all the grants that are out there. I'm a capital acquisition consultant with Widener, and guess what? Every day I wake up, I'm finding out there's a new grant that just came up, and there's a 1 or 2 day window, and then it closes, right? So it's a very fast moving environment. And the idea is that a lot of people have a vested interest in small business owners not going out of business. And as we all know, a lot of small businesses are going out of business. The other way. Yes.
Excuse me for interrupting you.
Sure.
Can we take just a small break when you finish this particular slide for some questions that are popping up? Thank you.
Sure. Okay. Other than that, we've got another source of funding is traditional stuff, loans, right? And we'll talk about that. And another area of consideration for cash flow is near and dear to my heart, because I am a tax planning specialist and and I help people with tax problems all the time. But taxes are a major cash flow consideration, and we're going to be talking about that in a minute. Okay, questions. Go ahead, Jerry.
Well, there's one that came in, which I think you can answer quickly. Let me just pull up the question. It basically says, come on, pull up. There it is. It's behind the screen. Excuse me. Can the PPP be applied to part-time employees as well as full-time employees?
Yeah, the short answer is yes. It's really related more to your monthly average payroll. So you would, and we'll get into this, but you'll calculate the average monthly payroll. But the short answer is yes, it would apply. No reason why not.
And the second question, I don't know whether you'll get into it. Are there some you mentioned grants that might become available in March or became available in March. Do you cover that a little bit later on?
Well, I can cover one. I know about one grant that's out there, but as far as what kind of grants are out there, how many are out there, that's kind of outside the purview of this presentation. But I would encourage you to sign up with the Widener University SBDC. Ask for me as your consultant, and we can get into detail. We give you a free 1-hour consultation. In fact, all our consultations are free, and we'll answer and look into every question that you may have and what grants are out there and get you connected with whoever you need to be connected with, because the amount of information out there is very large.
Yeah, let me throw in also, Joe, that in addition to the great resource at Widener, I know up here at the Chester County Library, they have a database of grants that working with the business librarian as well, and we can provide that information. She can help direct people looking for grants to a search engine where you can do some qualifications of this is the type of grant I'm looking for, the type of service I want to provide, and cull down the list of thousands of grant people to those that would be applicable to the type of service you want to offer. Okay.
Yep. So that just, like I said, there's a lot of information out there. Thank you, Jerry, for that. I made a note of that. I did not know that. All right. So next thing, next slide, we're going to talk about the Paycheck Protection Program. Again, established last year. It is administered by banks and financial institutions. It is available for businesses in existence before February 15, 2020. Loan program is based upon payroll calculations, non-taxable and forgivable loan if used properly. So believe it or not, if you can get $150,000 worth of PPP funds for your business, and if it's used for the purpose it was designed for, you can actually get that $150,000 forgiven. Now, I don't know about you, but for most small business owners I know, $150,000 is massive, right? And it's free money, which means that when you go do your tax return, you're not entering it as any kind of revenue. Now, if you may not know this, but there's an IRS rule that says if you have a loan that's forgiven, and this is before COVID, the person or organization that forgave the loan is supposed to send you something called a 1099-C, C for cancellation. And that would mean that, like a credit card company, if they wrote off a credit card and you owe $10,000, they wrote it off, they left you alone, but they're going to send you a 1099-C. Guess what? The IRS, Congress, says that's income to you. You have to report that on your tax return as income. So a lot of people think, oh, I got my loan forgiven, but then they're surprised to find out there's a tax on that. So it's a very big surprise. That's not going to happen here. You're going to get 150, up to 150. You put it in your financial statements because that's a management tool. But when you do your tax return, you do not have to put that down as income. Now, and then if there's anything over that you received as a loan, then you have to pay it over either 2 or 5 years at a 1% interest, which is really seriously cheap money, right? So it's still worth doing it, in my opinion. And here's gravy to add to that. So originally the idea was we'll give you a PPP loan, and you can use that to pay payroll. and whatever other expenses you qualify for the PPP program. And the idea was that you would get that, pay it. But when you went to do your tax return, the idea was you could not take as a deduction the expenses that you paid for with the PPP funds. But now the government is saying, guess what? We're going to let you double dip. And by that, they mean, number one, you get free money up to $150,000 that you used to pay, let's say payroll. Let's just focus on payroll. And then when you do your tax return, guess what? You can still deduct the payroll expense. Now that's called double dipping, and it's almost never allowed. But COVID-19 is showing us some brand new ideas here. And so it is now allowed for you to not report the income on your tax return and pay taxes on it. Plus, you get to deduct the expenses anyway. So that's a double benefit. So keep that in mind. And this is all available for sole proprietors and 1099ers. I know people who have I have a friend of mine, she's a yoga instructor, self-employed, works out of her home. I asked her, hey, did you file for PPP? She goes, no, my husband makes too much money. I'm like, there's nothing to do with it. If you're a sole proprietor, or if you work on a 1099, in other words, if you have a gig, right, a gig business going on, guess what? You are considered self-employed. And if you're self-employed, you are entitled to take advantage of the PPP program. I was just talking to my barber today, and I asked him, did you get the PPP one? He goes, no, I didn't know I qualified for that. I'm like, here we are a year after the program's been in existence, and there are a lot of business owners who still do not understand that PPP applies to them. Now, if you have a business and you are employing contractors, like 1099 contractors, well, they are not included in the PPP calculation, but they themselves are 1099ers. They can go and apply for PPP funding. So it's a disaster for a lot of people who didn't know that what they were entitled to, which makes me wonder if they have a financial professional like a CPA that they've been talking to, because obviously they've not been. And when the program expired late last year, there was over $1 billion left on the table. All right, that means that a lot of people who could have claimed PPP funds didn't, and the program closed with over $1 billion. It's now reopened, and there's plenty of money there. Go after it. You're most likely going to get something if you apply, if you qualify. So do apply if you can. Now, the second PPP program that was established by law at the end of December, basically the same rules. I'm sure you've all seen it on TV, in the news, read about it. Go to the SBA website. You probably all know about it. So we're not going to do a deep dive into this, but I just want to make sure that I keep this in front of people, because March 31st is the deadline for getting PPP applications in. And some banks are saying, well, if you wanted to get it in with us, you have to apply by March 24th or something like that. So you got to be very careful with that. But basically, the same rules apply, except that this time they're allowing additional expenses to be entered into the calculation for the loan, or what's going to be basically a grant. It's generally eligible if you previously applied. So last year, if you did PPP, you're more than likely going to qualify this year. The caveat is that if you had you have to have had a 25% drop in revenue in any one quarter of 2020 as compared to the same quarter of the previous year. You just got to do a basic calculation. Monthly financial statements will give you that information, or quarterly financial statements will give you that information. If you qualify, go after it and do apply for that. And again, it's forgivable money. If you did not apply for PPP1, guess what? You can apply for PPP1 now. And if you qualify, you can apply for PPP2. So I am telling people, go to your bank and talk to your bank about this. And if your bank isn't going to talk to you about it, there are some financial institutions out there like Cabbage, PayPal, Lendistry, which is dentistry with an L, Lendistry. There's some financial tech companies out there that are doing PPP. And if you didn't get a PPP1, you need to apply for that, because you need that in order to qualify for PPP2. And what we're telling people, go to your bank and say, I want to apply for one. And if I can, I want to apply for two. Like at the same time, or maybe the next, like a week later or whatever. Let's just stop there because I see some questions.
Yeah, Joe, I'll read the first one. Can you get a PPP loan and collect unemployment? I've heard you.
No.
Okay, you claim the loan as income divided by 8 or 24 and don't collect unemployment during those weeks. So that's the answer is no.
I don't think you can do that. I think it's PPP or unemployment.
Okay.
So, but you can collect PPP if the period of unemployment is different. So no double dipping. So it is possible, so you talk to your banker about that, but I think I understand what you're saying. So the answer is no for the same period of unemployment, but yes, if you get PPP for January through March and then unemployment from April to December, then yeah, it's for the period that's not covered for unemployment.
Okay.
And Jerry, I could read these. I could read these.
As long as you can see them, fine. Great. Go for it, Joe.
I work from home, but my business is an LLC. No employees yet because of COVID. Would I be able to apply? You must have been in business for PPP. You must have been in business as of February 15, 2020. If you were not in business at that time, you don't qualify for PPP. And PPP is based upon 2019. PPP1 is based upon 2019 income. So if you had no income in 19, no net income, even if you are in existence on February 15, you're not going to really see anything there. And if, by the way, if you're an LLC, you are the net income of the LLC is your wages, is your salary, by the way. So you would qualify on that basis, but otherwise, no to the other issues. I thought eligibility for PPP2 was dependent in part on using up. Yeah, so you have to have used PPP1. So if you didn't use PPP1 funding, that means you took in too much money. You won't be able to get PPP2. But hopefully, when you apply for PPP1, you said I need $50,000 to pay payroll and all that stuff, and over an 8 or 24-week period, you would have done so that all the money was used up. Then you can apply for 2. But you're right. If you haven't used the money for 1, that's going to pose some problems for you on 2. All right. What else?
Yeah.
All right. So let's go on to the EIDL loans established again last year, same time as PPP. This is administered directly by the Small Business Administration. Go to SBA.gov and just have a field day with the amount of information they're providing for you and the opportunities that exist for small business owners. When you apply for an EIDL last year, you would have immediately gotten $1,000 per employee, including yourself. And then anything over that would have been considered a loan. The loan is a 30-year fixed rate loan at 3.75%, 2.75% for nonprofits. And the first 10 months of the loan would have been deferred. And you would have by now received letters saying you're giving you servicing information for your loan and whatnot. And so knowing that they're not demanding payment, they're just sending you letters now saying, hey, this payment was due, but don't do anything right now because it's being deferred. But soon payments are going to come due, and don't expect that to disappear as a grant necessarily. And if you received over $25,000 as a loan, it would have been a collateralized loan. This is kind of important, something that doesn't get a lot of press. But when you get a collateralized loan with the SBA for EIDL, if it's over $25,000, check your agreement with them. You're going to see that somewhere in there says that you're putting up your business assets, your computers, your furniture, trucks, whatever that's in the name of the business. You put that up as collateral, which means that you can't just go around getting rid of these assets without first checking with the SBA, technically. Because when you have collateral, that you put up collateral, now the lender has a vested interest in that collateral. It's not like that you can just go on and treat it like the SBA doesn't exist. So be careful with that. And if you had a loan of over $200,000, you put up a personal guarantee, which by the way means your house and your personal assets. Also, December 27th, changes made. If you were entitled or if you received $1,000 per employee idle grant, now this is just a grant, and you didn't get more than, you only got a few $1,000s, this new law says you may be eligible for up to $10,000. So if you wind up getting 3,000, 4,000, they want to give you more money. However, you have to qualify for that. And the way that works is you do nothing except check your emails and check your spam folder, because the SBA is notifying people who are eligible to get up to $10,000 that didn't get it last year. They're going to contact you directly. There's nothing for you to do except check your emails to see if they contact you. It's telling you you're eligible to apply. Okay. Let's see more questions.
There's a comment in the chat box, Joe, about the same restrictions apply to an SBA grant that were used for PPP for somebody that was in existence since February 2020. So again, no 19 history, looking for a grant is my interpretation of that question.
I don't see it on
okay.
the chat. Where'd you see
Do
that?
the same restrictions apply to an SBA grant, I'm assuming for a nonprofit, that were used for PPP in existence since February 2020?
Joe, it's Maria. The question is in actually the chat box. There's a couple of questions that just popped up there.
Yeah, well, in the chat box, I don't see it. I only see,
Oh, okay.
yeah.
You might have to scroll down a little bit.
The only one I see is Steve Miller. I am a single member LLC. I got a PPP one as an owner compensation replacement. Should I be scared about that not getting forgiven? That should be forgiven as long as you use the funding for paying payroll, paying yourself as an employee of the business, which you are. You should not be scared about getting that forgiven, but you need to really stay on top of your banks, folks. Don't assume anything, because if they get it wrong and time lapses, you might want to be on the hook. So I recommend people be on top of their banks to get the forgiven application done. All right, but this question about Steve Miller, you should not be scared about it. Unless it's more than 150,000. You should be able to get it forgiven. But as far as that question, Jerry,
I can bring that person on, let him ask it. Let's just see if we can get a little clarification. So okay, John, I'm opening up your microphone. If you care to address your question directly to Joe, that would be great. You're going to have, there you go. Go ahead, John.
So this is the question about the grant?
Yes.
Yeah, so I was wondering what's kind of the procedure to apply for the $1,000 grant per employee. Who do I go to? Well,
so that's a grant that comes directly from the SBA, so you don't go to a bank for that. That last year you should have applied for an idle loan. Had you applied for an idle loan, they would have asked you how many employees do you have. You would have told them 2, 3, whatever. They would have automatically given you $1,000 per employee grant. Now, that opportunity is pretty much gone. The new opportunity is for people who apply for a grant and didn't get enough of the grant, and they're making it available. They've added, believe it or not, another threshold for whoever's going to get even now the idle loan or the idle grant, and that is they're targeting low income areas. So there's a map that, if you go to I think the SBA website has it, but you click on a link, it takes you to a map of the United States where you can focus in on Pennsylvania, and you can put in your zip code. It'll show you the specifications about your zip code and whether or not you're considered a low income, a targeted low income neighborhood that would allow you to get an idle money now. Now, if you were entitled or qualified for an idle loan or grant last year and you didn't apply for it, I think you can still do that. So I would go in and check that. But everybody else, you do nothing. If you got an idle grant last year, you're going to get an email telling you, hey, we want to give you more money. And so watch your emails for that. So that's most people who apply for the idle. So if you haven't done that yet for last year and apply for idle, I would apply to see what happens.
So we applied for that loan last year, but we were able to pay it back.
Did you get a grant?
Yes, but not for not to the amount of $1,000 an employee, smaller amount.
Well, okay, so you should be looking for an email from the SBA,
Okay.
or you should be contacting the SBA.
Okay, good.
They want to give you money. So if you qualify for it this time around, they want to give you money, and the caveat is that you must have qualified last time and didn't get enough.
Okay, so we not get a penalty for having paid it back.
If you paid it back, they might actually want to give it back to you.
Okay, good.
Okay, a couple of more questions, Joe, in the
Okay, I see
Q&A.
them.
Okay.
All right, so let me go down. All right, so as a retail business, can I use funds from idle for buying inventory to resell? So idle funds are generally, like PPP, are generally designed for working capital. The question, it is questionable whether or not inventory is considered working capital. If you don't mind, Nate, if you could shoot me an email, we can talk about that. But working inventory might be considered working capital in some instances, but it's designed more for like day-to-day expenses to keep the business afloat. May not be necessarily qualifying for, buying and selling inventory. So that one we have to. I would love to get that answer for you if you want to reach out to me directly, if you don't mind. And Maria is typing an answer on that. Lisa, how does the idle affect unemployment? So if you get an idle grant, it depends on when you got the unemployment, but you should have gotten the grant that it doesn't affect. I don't think it affects unemployment. I think the only thing that affects unemployment, I think, is PPP. So does that answer your question, Lisa? You could type it in. So, okay, I'll be watching out, Lisa, for your response, but the idle loan will not affect unemployment. The idle grant will not affect unemployment either.
Joe, you might want to add that tax advice, and it's going to really depend on individual situations and how you might want to qualify. General answers.
Yeah, I mean, this is general information, and so don't sue me because but just contact me if any questions. I'm happy to answer any questions. Again, with the SBDC, I'm here for you for free. Okay. All right. So let's go on with from idle, because we're going to run out of time soon. Grants. The next place to look for money are grants, right? So grants come and go. So stay alert. We talked about that. One that I want to bring to your attention is called the Comcast Rise grant that closes on May 7th. They are offering, maybe if they may not be offering cash, but they are offering for free marketing services and tech makeovers. So instead of paying somebody to help you with that kind of stuff, they might be able to help you make a commercial, and you may not have to pay for it, that kind of a thing. So, but they were giving out funds, but the opportunity to get funds has closed very, very recently, so it was pretty quick. But I would recommend looking at Comcast Rise and keeping an eye on the Pennsylvania Department of Revenue for whatever they may be advertising for new funding that they make available. Grant funds may or may not be taxable. So whenever you get a grant, you should read the fine print or ask the questions. Is this going to be taxable or is it not going to be taxable? I don't think there's any one set rule that's going to say, oh, grants are just, free money. My guess is that most of it will be free because of the situation we're in, but read the fine print. And again, to get a grant, documents to get a grant are often similar to getting a loan. You need your entity paperwork. If you're an LLC, you got to prove it. It's got to be active and up to date. You should have your tax returns up to date. By tax returns being up to date, we mean 2019. because we're still in the extension time for 2020, so don't sweat it. Unless they ask you for 2020, then you have to rush and get it. But tax returns have to be up to date. Financial statements have to be up to date. You should have an operating agreement if you're an LLC, a partnership, a corporation. This is stuff that's going to come up. You got to have it ready. And you also should be ready to explain why you need the funds we're going to use them for. Always have these ready to go. If you've learned nothing else from COVID, it's that you should have all this stuff ready to go, because you don't know what next year is going to bring, right? Maybe some new opportunity arises that you're going to want to take advantage of, and you don't want to be scrambling. I know last year, man, we were scrambling with so many business owners trying to get their basic stuff together. And if you really want to kill your CPA, do that during tax season, right? So I recommend this, throughout the year, keep your books alive and ready and meaningful, because if you're doing something wrong with your business, your financial statements are going to talk to you. But if you're not doing your financials every single month, you don't know that every time you sell a cup of coffee, you just lost a nickel. You won't know, right, until it's too late. So I strongly recommend, you keep your financials up to date. The next place to get funding is loans, right? The Small Business Administration has the following items that I want to bring to your attention. There's something called the 7A loan. It's a business loan. You go to a bank for that, by the way, and you go to a bank that does SBA loans. But you can get an SBA business loan, a 7A loan, for working capital, refinancing debt, or purchases. So there's an answer for the, like inventory, right? There's something called a 504 loan. That is for the purchase or improvement of real estate for business growth, for new or existing facilities, for machinery and equipment. See, that is different than working capital. So working capital is very fluid, liquid stuff, day-to-day stuff. A 504 loan is for more permanent stuff. Does not apply to purchasing real estate for real estate speculation, like buying, flipping houses or properties, or renting properties and all that stuff. So that's just, you own a business, you have a building, you want to improve the building, or you have a business, I want to go buy a building for the business, that kind of a thing. And then there's something called a micro loan. I want to really encourage you to look at this. Micro loans from the SBA up to $50,000. Payable, I think it's like 2 to 5 years, you got to pay it back. But if you're a startup or you're trying to expand, and for a lot of really small businesses that we deal with, 50 grand is a significant amount of money that they could really use, to get their business to the next level, right? It's a micro loan. It doesn't get a lot of attention, but I highly recommend you guys take a look at these 3 areas, especially the micro loan. That's what the SBA is there for. What do you do to get a loan? First stop should always be your bank. Talk to the banks first. PPP, talk to your bank. PPP2, talk to your bank and see what they say. And then if they're not going to work with you, you might need another bank, or you need to find other relationship. But you should have a relationship with your banker day in and day out. When I go to my bank, they know me. I show up once in a while. I make a stupid deposit of a check when I can take a picture. I show my face, I chat with the loan officers, I just say hi to people and develop a relationship. You should all be doing something like that. Your bank should be a local SBA lender. So you're gonna do work, you wanna get SBA financing, make sure that the bank that you're dealing with does SBA lending, all right? For you guys who wanna do startups or in the startup phase, lock in your financing before you need it. Because once you start a business and leave your jobs, you can expect banks to say no, because you no longer have steady income. W-2 is considered steady income. You're more likely to get a loan or a credit card or line of credit, on the house or whatever, if you show steady income. Once that is gone, and they ask you, okay, how do you make your money? You say, I have a business. And you say, okay, show us your information. And you're going to show them what? If you're a startup, you're not going to show them very much. And guess what? That decreases your ability to get financing. So I recommend people go into business, get financing before you go into business and leave your jobs, because things are going to go downhill from there in that regard. So creditors do like to see income stability. You can't get around that. Don't go into business without funding in place. So you need savings. you know, access to retirement funds, home equity, credit cards. I mean, I'm sure you guys all know this, but you know, cash is king. There's no way around that. And get your loan-related documentation in order. Know how much you want to borrow in advance, and always engage a financial professional to assist you. Too many small business owners are doing it on their own, and then something happens and they have a disaster. As far as loan applications, just like grants, we talked about it, have all your stuff in order, all your paperwork in order. I do recommend that every business owner operate at least as an LLC, a single member LLC. So this way you have some liability protection. I recommend you look that up, talk to an attorney, and make sure that you are protecting your personal assets. Half the battle is making money. The other half the battle is keeping that money, right? And you lose that money through taxes and lawsuits. So be careful. Avoid running personal expenses through your business, because that's a no-no, and that gets picked up on the loan applications or the grant applications, and then that can nosedive your ability to get a loan. There are 5 C's of credit that you should consider. Character, which equals credit history, apparently. Your capacity, can you pay off the debt if you get it? Do you have any equity or skin in the game? Lenders like to see that. Or do you have any collateral that you can put up in case there's not enough equity in the business? And as we all know right now, we see COVID, we have conditions. Is the economic environment open to easy money? So those are the notes about loans. Let me see, are there any more questions? All right.
I don't see any coming in.
Okay, so let's talk about income tax returns. It's that time of the year again. So partnerships have to file Form 1065, and S corporations have to file Form 1120S. Those tax returns or an extension thereof was due this past Monday. If you file for an extension, you get an automatic 6 months more to file the tax return. If you fail, and I bolded this because I'm surprised at how often this happens. If you fail to file an extension or the tax return by March 15 of every year for a partnership or an S corporation, you're going to get hit with a $200 a month per partner or per shareholder penalty for a maximum of 12 months. So let's just say it's just your S corporation, right? And you fail to do that, and you file your tax return come October or September. Well, you're going to get hit with penalties for from March, April, May, June, July, August, September, like 7 months worth. Let's say I have a client that didn't file the S corporation return for years. They're going to pay $2,400 a year. And then it starts to rack up interest until the tax return, up to a maximum of $2,400. So if you don't file for 5 years, you owe $10,000 plus interest, whatever. So the moral of the story is file for an extension, play it safe, and then file on time, even if you can't pay whatever people are telling you have to pay. We're going to get into that in a minute. C corporations, Form 1120, and individuals, Form 1040. Those are due next month, April 15. Right now, somebody's saying, that was extended, and you're right. Just yesterday, I think it was, right? The IRS said, hey, individual tax returns, 1040s, are now due next month in May, not in April. So everybody gets an extra month to file their personal tax returns. If you still can't file by May 17, you can file for an extension. The extension is going to be the same. It's going to take you through October 15. This applies only to individual tax returns. It does not apply to C corporations, partnerships, or S corporations. Also with nonprofits, they are also now due May 17, and if you do an extension, it's going to be due November 15. And we're talking about calendar year companies and stuff. We're not talking about fiscal year, which somebody may have a fiscal year of September 30th, right? That's different. So, but generally speaking, most people are on calendar year. Trusts and estates are due April 15. I'm not aware of it getting extended. So if you file for an extension, the due date is going to be September 30th. Tax, let me see, we've got a question here. if three separate individual, if three separate dash individual sole proprietor LLCs work together on a project, would they be considered a partnership 1065? That sounds more like a joint venture to me. And the question I have for you is, Henry, is if the joint venture makes money, how is that going to be reported? It's going to have its own separate financial statement. And how's the income going to be divvied up and whatnot? It sounds to me like it's probably a special project, a purpose joint venture. My guess is that, with the little that I can see here and understand, my guess is that it's a partnership, and you may have to report it as such, unless your accountants tell you otherwise. And here we're talking a lot about generalities. So for more specifics, do contact me if you want to have a deeper conversation about that. A lot of stuff, sometimes there are a lot of facts and circumstances that have to be taken into consideration before we can give you a full, authoritative, so to speak, answer that you can take to the bank. Tax preparation, by the way, requires some skill and education. With that, I put that there because there's business owners out there who think they can do their own tax returns by themselves. So they will go ahead and they'll buy their own tax software. I think TurboTax has a commercial product. People buy their own stuff. They do their own tax returns. And, there's this old adage that says, you don't know what you don't know. So I tell business owners that they should not be doing their own bookkeeping, and they should not be doing their own tax returns. There is some skill and education and knowledge that is required. And if you do stuff on your own, I think you're asking for trouble. But if you do it by yourself, then you definitely got to do it some professional type of tax program that tells you what to look out for. We do lots of tax returns in my company, and even we are well educated. I have a guy who works for me. He's a CPA and a lawyer. He does excellent work, and he doesn't know it all. He has to go out in there, research specific situations. And sometimes it takes the two of us to sit and talk about, okay, what is the tax impact of that? Okay, how do we handle that, right? So if you have professionals who have to stop and think, imagine somebody who's never been trained officially on doing tax preparation. So unless it's a simple 1040, I recommend you don't do your own tax returns. Do not be, if you're a business owner, don't be in a rush to meet the initial deadline. We have people all the time, hey, I want to get my partnership return done March 15, no questions asked. Like, okay, we could do that, but what just happened here? As you may have heard, just a few days ago, the Biden administration just said, hey, if you got unemployment of if you got unemployment in 2020, okay, the first $10,200 of unemployment compensation that you received is not going to be taxable on your federal tax return. Now, think about that, right? March 15, 16, something like that, they just came out with it, right? There were people who wanted to get their tax returns done by March 1st. Even simple 1040s. Guess what is going to happen? Guess what's happening now with their tax returns? They have to file either an amended tax return, or they just have to sit and wait until the IRS provides further guidance about what to do when you file the tax return too early, and now a new law just got passed, and it's a good guy for you. Now you just got to sit and wait until somebody tells you authoritatively how to deal with that. That's number one. Number two is, if you're a business owner and you're asking your accountant to file your tax return by March 15, or if personal, by April 15 or corporate, you're basically asking a very, very busy tax professional and accountant to rush through your data. Now, I don't know how that could be a good thing. When I deal with my clients, I like to sit and think. I don't want to crunch numbers and fly it out the door because the client just wanted to get it done. How am I supposed to consult unless I could think? And I can't think if I've got a pile of paperwork that's got to get out the door. So we recommend to all our business clients, don't be in such a rush. Let's get the numbers done. Let's make sure it's right. let's make sure that we can think about this, because if you made mistakes in 2020, and we'll find them in your financial statements if we have the time, and we can analyze it and run some analysis, we can come back and say, hey, your tax return is done, blah, blah, blah. But guess what? Man, you really blew it here. You really blew it there. And it looks like you're on the same path. So let's take a look at 2021, consult, and figure out how to not repeat the same mistakes. But I am telling you, I don't care what other accountants would tell you, we're all in the same boat. We're all being rushed to produce data and crunch information. And we're not computers. We're human beings. We need to think, and we cannot think if we're being rushed. So it is to your benefit to have your accountant do it when it's not crunch time, right? So get on extension and then go from there, unless there's extenuating circumstances like you do a big refund and you're going to foreclose on your house if you don't get it. Yes, and of course, let's get it done. And if there's any issues, you could also do an amended tax return, right?
Joe,
So,
I know we're getting close on time and presentation, but there is a good question that just came in on general partnership. If you can take a look at that, and I know it might not be a simple answer.
all right, we're a general partnership, but we want to convert into LLC and move in a new retail space. Is there any restrictions we need to know about due to the EIDL and PA C-19 relief grant that we received? These are different questions, really. So if you're a general partnership, that means you're not an LLC. You can easily just apply to the Department of State of Pennsylvania and apply to become an LLC. Moving into a retail space, I don't think that's related to that. But as far as are there any restrictions we need to know about due to the EIDL and PA relief grant? So the only thing I would tell you is that when it comes to EIDL and any relief grants you receive, you just have to read the paperwork that you receive, the agreement that you sign, and make sure you just abide by it. But basically, EIDL is for working capital. It's not so you could make capital improvements to a new retail space. So watch out for that. You may receive a grant to help you build out. That's fine. Then it depends on the grant. I hope that answers your question. Extension of time to file is not an extension of time to pay. You need to know this. So when you file your tax return, let's say, now that the deadline is extended to May 17, let's talk about your 1040, your personal 1040, because that's the only thing now that is due a month later than it normally is. You have until May 17, so you do your personal 1040 tax return. If you owe money, the money is due May 17. Normally, it's due April 15. So normally the tax return and the payment is due April 15. A lot of people, they don't have the money, so they delay, they go on extension, and then delay filing the tax return until, let's say, October, and not realizing that, okay, you could do that, but the payment itself is not extended. You can check it, you'll see that there's never an extension to pay. There is an extension to file. So a lot of questions we get is, well, how am I supposed to know how much to pay if I didn't do my tax return yet? Well, the IRS says, we don't care. You got to try to figure it out. Overpay if you have to, but your payment's due April 15. Well, this year's due May 17. But guess what has not changed? There's something called an estimated tax payment. Estimated tax payments are due April 15. Even with the change that we just saw for May 17, you got to pay your tax bill, file your tax return. Do an extension, fine. File your tax return October, but pay the tax due April 15 or May 17. But guess what? Pay your estimated tax due for 2021. That's your first payment for 2021. That's due April 15 as normal. Okay, any questions about that? Let's talk quickly about partnerships and S corporations. A lot of things that I see where a lot of people get confused about. They're considered pass-through entities. What that means is a partnership or an S corporation, they file a tax return, the net income of the tax return, they don't pay, the company does not pay taxes. The companies issue a K-1 to the owners or the partners, and those partners get their K-1. That's almost like a W-2 for them. And they take those K-1, they enter it on their own personal tax returns, and that's where they pay taxes. Sole proprietors are different. Sole proprietors are single member LLCs. they file their income taxes for their businesses on Schedule C, which is part of their 1040. So it's not a separate tax return per se. So in May, when you file your 1040, there's going to be a Schedule C, and you calculate your income and all that stuff on there. And that's where you will, if you have an income to report, you will pay your Social Security and Medicare taxes, also known as self-employment taxes, 15.3%. So there are two taxes at play when you're a sole proprietor. And by the way, this applies to partnerships also. You get a K-1, you put it on your tax return on your 1040, and it's going to calculate self-employment, which is Social Security and Medicare taxes. That's 15.3% that of your net income. On top of that, you have something called the income tax. So there are two types of taxes at play here. One is a self-employment tax, Social Security, Medicare. The other one is income tax. So yes, you'll pay 15.3% on $100,000, $15,300, and you may pay another 25% in income taxes. So your tax bill may come out to be 40% or $40,000, right? That confuses a lot of people. You just got to keep in mind, if you've ever had a W-2, you'll see you have Social Security, Medicare taxes, but then when you do your tax return, you pay income taxes. Same concept, it's just packaged differently. C corporations are not pass-through entities. If you have a C corporation, that means that you want to go public, or you want to have a lot of shareholders, or you have some complexities going on. But a C corporation files the 1120 tax return, and it pays income taxes itself, unlike the other companies we just talked about. So if a C corporation has $100,000 of income, it's going to pay a $20,000 tax bill. And that means that $80,000 is left that can be distributed as a dividend. So if you are a shareholder, you'll get a dividend. You're going to get that dividend. You're going to report that on your 1040, and now you're going to pay taxes on that dividend. So that's called double taxation. And small business owners, unless they have some special reason for it, you should avoid being a C corporation. A C corporation is double taxation. It's unnecessary taxation. Any questions about that? And my final notes, taxes affect cash flow. So you should plan for taxes for your business, right? If you're making money, you should be thinking, okay, I got to pay taxes on this sucker. So you should figure out how much should I put away so that every month or every quarter, so when it comes time to do my tax return, I don't have this crunch that a lot of people experience, and I understand that, but you should be budgeting, because you get yourself into some serious trouble. I think the last time I heard there were over like 12 million Americans in trouble with the IRS. They have all kinds of issues because of stuff like this, So include taxes into your cash flow projections and thinking as a business owner. Taxes are a major killer of wealth. And so you should implement tax reduction strategies. I personally do a lot of tax planning for clients, because we recognize that's a really good way to lose money, is by not planning your taxes. There are strategies of all kinds available for all kinds of individuals and businesses. You just have to take the time to do it throughout the year and not wait till the year ends and then go see your accountant and say, hey, what can we do to reduce my taxes? Well, very few things you can do to reduce your taxes once the year is over. But there are things like, you could do an investment into an IRA of some kind. If you are in rental real estate, or if you have real estate in your business, you can maybe accelerate depreciation and do a report or an analysis in 2021 to bring the extra depreciation into 2020. But there are very few things that you can do once the year is over. The time to do tax reduction strategies and planning is throughout the year. But the problem with tax reduction strategies is we can do a really good job of lowering your income and your tax bill. But if you go for a mortgage, you don't want to show too low an income. So there's a balancing act that has to go into strategizing on taxes, because the way you kill taxes is by reducing your income on your tax return. But if you go for a mortgage, you don't want to hear the bank say, oh, you don't make enough money, right? And the last thing that I want to bring up to your attention is something that's coming up more and more, and that is sales taxes. Now, with sales taxes, if you are shipping around the country, you have to be concerned about what are your requirements for collecting sales taxes for the products you're selling? There is no uniformity. Every state is different. And even in some states, Missouri comes to mind. Missouri has, I have a client that's shipping all over the country and now around the world. And now we have to be concerned about around the world. But Missouri, we have like 300 entries on their sales tax return. Every city in Missouri and township has a different sales tax requirement for the products that are being sold. So you have to make sure that you know who you're shipping to, where you're shipping to, and what the sales tax requirements are. Because if you don't, and they find out, you may get a tax bill because maybe you didn't collect sales taxes when you should have. Now, there's a guy in Bucks County I heard about a year ago, 2 years ago. He's an Amazon reseller or something like that. He was shipping to California, not realizing that he had to be collecting sales taxes. It's just a small mom and pop Amazon reseller. And he was written up in the news and everything. He got a bill from California for $1.2 million because he had not either collected or improperly collected or not paid properly to the state. And it was a complete shock to him. And now we're seeing more and more clients not understanding what they need to do with e-commerce. So it is to your benefit to stay out of trouble, get your sales tax profile tight. I also have another client that something went wrong and now she's on the hook for like a large sales tax amount because there was some kind of a miscommunication. So those are my basic thoughts for this time of the year. And I welcome any more questions.
Joe, there were some questions that were sent in prior to the workshop opening. I think Maria sent them over to you.
Right.
If you could just address those and then turn the control of the screen back to me, we can get to the questions and wrap up. Great, thank you.
Right. Okay, I got to find that question.
I can help you if it would
Okay.
make it easier. So we have actually three questions from Rob. I'll do them one at a time. What is the most strategic tax advantage status from a corporation perspective for an online membership business?
Well, I don't know if being an online membership business matters, to be honest with you. I think that I'm not a lawyer. I can't give out legal advice, but I can tell you this: if I see a truck coming at you, I'm not a first responder. I'm going to tell you get out of the way, and I'm going to try to save you. And I'm telling you that if you're running a business, you should be running as an LLC for starters. If you're one business owner, there's no partners, you should be a single member LLC. If you're a single member LLC and you want to be taxed as an S corporation, or if you're a single member LLC and you want to be taxed as a C corporation, believe it or not, you could do that. So an LLC is a very simple form of organizing your business. It's a limited liability being the key word, company. And it creates a shield between you and your personal assets. So we always recommend people be limited liability companies and then do whatever elections are necessary with the assistance of a tax professional, because sometimes things are just not necessary. So I would do that. I would just wait and talk to a professional. So the kind of business you have doesn't matter. You should be an LLC, even if you're working from home. And if you're not going to be an LLC, then make sure you have sufficient insurance to protect you in the event that you get sued. Because like I said, half the battle is making the money. The other half of the battle is keeping the money. And there are two places you're going to be fighting to keep the money. And one is taxes, and the other one is lawsuits. And if you're a business owner, you have increased chance of having something go bad with your assets.
Okay, and from the same person, we have two more questions I'll give you here, Joe. What is the most cost-effective tax software that can be used for my business? And are there any advantages I have with respect to leasing an automobile in my business as an LLC?
Right. So if you're leasing a vehicle, you can take the leasing expense off of your books. So that's a tax deduction or a business deduction. If you buy a car or a vehicle, you can take depreciation on that vehicle. And depending on, how you structure things, you could either take depreciation and all expenses. So let's say you buy a truck for your business and it's just a truck. So the IRS knows that if you buy a certain type of truck, you're probably not going to go take a new date to a nice restaurant in a business truck. So it's a business item, right? So they're going to say, okay, you can take depreciation, you can deduct your oil changes, your gas, all that stuff. That's one way to do it. Or you could use your own personal vehicle to use in the business. And if you're going to do that, well, you can use the mileage deduction and track mileage and then have the mileage expense transferred to the business as a reimbursement to you. And there are techniques for doing that. So those are three ways that you can get the vehicle on the books. But beware, the IRS knows that if you have a Lexus, that the business buy a nice Lexus, the IRS does know that, hey, you could use that for taking girls out on dates, or guys, right? So they're going to want to see mileage logs if they audit you. So be very careful when you're dealing with vehicles for business purposes. Also keep in mind, if you're going to use vehicles, like let's say you buy a personal vehicle and you're going to deploy it for business use, I recommend you talk to an insurance agent about, hey, I'm using my personal vehicle for business. What do I need to know? What do I need to be aware of? It's not just the tax impact. It's not just the financial impact. It's also you're driving down the road, you kill somebody. And you were on business when you did it. Well, if all that comes out in a lawsuit or whatever, you need to have things tight. So I try to give my clients a 360 view of all the things that can happen, because I'm very concerned about asset protection. I'm very concerned about people not losing their homes and their assets because they messed up on something like a vehicle not being properly insured, not being properly structured, or the IRS is coming after them because they didn't have a mileage log. It's a mess. So that's the kind of thing I recommend you come and speak to a CPA directly about, have a consultation. You could do that for free with me, with Widener, and we can sort that out and help you make those decisions. But if you lease a vehicle from the business leases a vehicle, you can take the leasing expense against the business. But again, if you're going to use it for personal reasons, also, the business cannot be paying for your personal expenses, including mileage and cars.
Okay, thanks. So,
Software.
the question was about the cost-effective tax software.
The only person who should be asking me that question is a tax professional. Okay, so, but other than that, I don't know, because I only deal with professional tax software, and we're the only ones who buy those are, tax professionals. But other than that, I can't answer that question. I don't know.
Joe, we had two additional questions, and then I want to get to a very, very short poll. They're both tax related. One is, what's the minimum amount of money one has to make in the tax year in order to file taxes on the business?
So if you're a single member LLC, I think it's $400 that you have to do it on. I would recommend just filing it, even if it's not $400, just so this way, you see, one of the things you have to consider is that, if you have a small business and you're losing money every single year, what is the one question that always comes up? The one question that always comes up, well, is the IRS going to consider me a hobby, right? Well, here's one way for the IRS not to consider you a hobby. Keep financial statements for your business. File tax returns for the business, even if it's losing money. This way, and have business cards, have letterhead, have activity logs that show that you have been running a business, but you've been losing money for years. Guess what? This is myth that says, well, if you're losing money in a small business for 3 out of 5 years, they're going to consider you a hobby. Well, if that's the case, I can tell you there are a lot of companies out there, public and private companies, that lose money year in and year out, and they're investing for years and years and years to build out a business. Is anybody questioning that they're a hobby? No. So the truth of the matter is, if you're running a business, run it like a business. I would file the tax return, even if you only make $100. I would file the tax return. So this way, you're showing you're serious about it, you're running a business. But I think anything less than 400, you might be able to get away with not reporting it. But I report everything.
Okay.
I report it. And then if you're a regular business, like if you're a partnership or S corp, whatever, or C corp, you have to file. It doesn't matter what you make, you have to file.
Okay, the second question is, if you would just repeat why we should consider holding off on filing our 2020 taxes. You mentioned some changes by the government, and what are the changes? And
Right. So
Go
but
ahead.
this week, in the past 7 days, we saw 2 changes come through, right? Number one is unemployment compensation of up to $10,200 per person. So if you have a joint return, it could be $20,400 if you were both unemployed. If you make, and your income has to be no more than 150, adjusted gross income, modified adjusted gross income. So that just happened, right? So had you filed your tax return in February, you'd have to file an amended tax return. So if you go to a CPA and say, hey, they just passed this new rule, we have to file an amended tax return. Well, a very busy CPA is not going to appreciate that. And they're going to say, sure, we'll do it after tax season is over, right? So and last year we saw changes come through, and this year, now in 7 days, we saw 2 changes come through. How do you know they're not going to change something else? Like I said earlier, we're still looking at pandemic 2.0. Italy's in shutdown. Some Chinese cities are in shutdown. Europe is going into shutdown. So if we go into another shutdown and don't think it won't happen, and then the government starts, changing tax law to, just to try to keep up with the economic impact of that, and you've already filed your tax return when you really didn't have to file it, and you just could have sat back and waited a little bit, then you're just going to have more expense for tax filings and more complexity to deal with. That's all I'm saying.
Okay. Well, Joe, thank you so much for some great information. I know I learned a lot, and I hope the entire audience learned a lot by what you offered today. And as mentioned earlier in the presentation, we will be providing all the people that registered for the workshop either recorded webinar or a copy of your slides. So thank you again. It really was a dynamic presentation, and it's appreciated. I'm now going to launch just a short poll that I'll ask the participants to fill in and take a few minutes to do, or a few seconds, few minutes to do it. And as we close up, I don't see any other questions coming in. I see another chat message coming in. Let me take a look at that from my end. Mainly, we're getting some thank yous from participants, a great workshop. So we're asking them to complete the survey, and hopefully everybody can see it. I don't see anybody voting yet. Okay. And let me give that about a minute and provide them just a little bit of information about SCORE. Could use your background music again. I'm going to give it about 30 more seconds, then we're going to close it down. All right, I'm going to end the poll now, and I just want to get that off the screen and just let you know, this is Jerry Francis. I am with SCORE, and there's my contact information at the SCORE office. And basically, we're here to help. And there's a contact information for the SCORE location. Schedule an appointment with our mentors, as Joe is a free resource available. So are the SCORE mentors that we have associated with our chapter. And please reach out for that help and assistance if you need it. If you're not already working with a mentor, you can request one. If you are, please feel comfortable to share this seminar with them. And if you've got questions on it, if they don't have the answers, I'm sure Joe would be more than willing to assist our counselors as well. Last but not least, there's our location, our phone number, and our email. We thank you and look forward to you joining us at any future time for additional workshops. Watch our space. We'll now have you on our email list. Some very valuable information. And as earlier mentioned, the greatest part about it is it's all at no cost to you. And we really thank the SBA for their sponsorship and for putting the program together 50 years ago, and the fact that we're able to share our experiences with you as an audience. Good luck with your businesses, and look forward to seeing you sometime in the near future. Thank you.
Bye all.